Well, here our next session. Well, as we all know that digital banking is on the rise, the importance of physical branches remains undeniable. And this session will explore how banks and financial institutions are blending digital agility with physical infrastructure to enhance customer trust and accessibility in both rural and semi-urban areas. But before we move forward, I would urge all our members who are joining us in the room to please join us at the front seats. May I request everyone to please join us at the front seats if you want to really experience all those conversations up close and personal. I would urge you all to please take the front seats right here. And with that, are we good to begin with the next session? Okay, with that, let me invite our speakers right there. May I please invite on stage Mr. Ajay Sahasrabuddhe, Chief Revenue Officer, Hero Fincorp. Can we get that energy in and give a round of applause for our speakers joining in on stage? Inviting back on stage Mr. Narayan Rao, co-founder and Chief Growth Officer, GovEVA, to join us as well. A warm welcome to you again. And next up, may I also please invite Mr. Dhrumil Dalal, Head IT, Bharat Banking, Axis Bank, to join us as well. A warm welcome to you. And over to our session speakers to take this forward. Thank you.
So good afternoon. As the introduction has already been given about the relevance of physical branches, so I'll request both of you to chip in your thoughts on these. So we are in an era where digital banking is on the rise, digital transactions are on the rise, and then where is exactly the relevance for physical branches? Do they still have a role, or do they just serve as, say, trust points to foster trust among customers that the institution that they're having relationship with actually exists, especially in the rural and semi-rural areas where there could be a need for such trust building? Or are physical branches, do they still serve a purpose beyond just trust points? And how do you ensure accessibility for rural and semi-rural customers where probably they're either not digitally literate or they lack digital connectivity? So what kind of role do you think branches play today, given the proliferation of digital tools?
Hi, good afternoon, everyone. I think Good afternoon. I think the subject itself shows the importance of physical infrastructure. In a fintech event, we are talking about the relevance of a branch's customer touch base. It itself shows that there may not be a replacement, but there are ways and means to enhance that personalization, what we really wanted to do. And if you are in a lending business, I think that is more power to have physical infrastructure to interact customer, to service him. Because if your customer base is hinterlands, the rural areas, yes, the internet is available, but the education in terms of whether it's a investment or whether it's a lending, people require assisted journey. So nowadays there is a word which we all have coined is phygital. So I think that is one area which I don't think will get replaced. Yes, the two things which will coexist with the help of technology, we can call AI, ML, whatever, it can enhance the efficiency in some of your back-end operations. But on a front-ending, you required both the things coexisting to have better customer experience, trust building, because there are certain lending product which requires face-to-face interaction. And for that, we required a physical presence, some sort of. The branch structure may get changed. It may not be a 1,000 square feet branch, it could be a 100 square feet service center. But that space is very important to cater to underserved customer predominantly.
Yeah, I think I agree with my colleague here. I think I'll start with this. In fact, for some of the MFI loans and some of the personal loans that we do, one of the risk requirements is that the customer should be within the 25-mile or 25-kilometer radius of the physical branch. While the digital advancements have eased the transactions, I don't think they are there to replace the physical branches, at least in the rural India. Okay, I don't think, at least I have visited a physical branch here in Mumbai, where I live, but for the customers, the rural branches is the central point of contact which will make them part of the financial infrastructure of this country, right? That is one. Second, the literacy rate. As far as the literacy, customer literacy is concerned, I don't think that segment is yet ready to transact on their own. Most of the journeys that we have may be associated with any type of loans, or it may be a savings account or a CASA journey. It's all assisted, which means that you need somebody to guide the customer, to walk them through it, explain them, and then transact. So while the digital services are on rise, they are nowhere near replacing the physical branches, at least in the rural India.
Yeah. And we live in a country with amazing diversity all over. And as you know, in India, each region can have its own special nuances and unique requirements and exhibit, different behaviors. So how do you think lending institutions can balance, or customize solutions that meet the specific needs or behaviors of this customer? And have you seen any such innovative solutions which are specific to a particular region or customer segment? And do you incorporate their feedback into building new financial products?
Yeah, I think let me bring the north and south split. So it clearly showcases some of the typical characteristics in terms of portfolio behavior, in terms of requirements, whether it's secured loan, unsecured loan. There are specific trends, and I'm not just saying north, south, or east, west. Every location has its own nuances. Mm-hmm. And I will give you example from my company side. We are the largest two-wheeler manufacturer and largest two-wheeler financier. Every location in every dealership, the preference of customer choices are different. Someone needs a very attractive loan with a low LTV. In some states, they required high LTV, and they don't mind the rate of interest. The customization is extremely important, and in the age of AI, if your customization is customer profile basis, then it can bring the nuances. It will go beyond location, it will go beyond region. But the local flavors will certainly bring more sharpness when you wanted to personalize offerings. Keeping that choices, that behavioral pattern, what you see, can really help. And I think everyone today is working on that in the personal hyperization or whatever you call. But the larger element coming in from these, the territorial, the state level, regional level biases, which you will definitely see. So I think it's a more prudent to have that instead of painting with a one brush and one color will not yield the desired results what we are all looking in terms of efficiency, product quality, offerings, etc. So it is extremely important to have this in your underwriting, collection, sourcing, etc.
Yeah, sure. I totally tend to agree. In some of the states around the border areas who prefer cash transactions compared to cashless transactions. So when we roll out a service for cashless collection or for automated disbursements, we see a higher uptick in the states which are which are towards the central part of the country. Not only that, the product preferences are also different across different states. The product preferences in north, the product preferences in south. For example, we will have a much bigger and a meatier gold loan portfolio towards the south as compared to north. Okay, you look at agri portfolios, much more biased or much more heavier in north. So depending on the regional, obviously the product construct is also going to be different. The financial services we provide will also be different.
Thanks. While digital tools bring in innovation, there is always the question of balancing that innovation with personalized dealing with customer, right? So how do you see this, the digital innovation not losing the personal touch which the customer expects or values? And do you have any examples? I mean, I can think of one like video banking, but any examples where technology has enhanced rather than replaced this kind of a relationship-based servicing? And do you see any challenges that you would face to balance this automation versus human interaction? Maybe.
Absolutely. So I tell you what, as I said earlier, see, we are not ruling out the physical world completely. What we are doing is going ahead with the phygital model, right? So we are always going to rely on assisted model, where staff from the bank, may it be insourced, outsourced, whatever that is going to assist customer in completing the transaction. Okay, that's the line here. It's not like they will never be self-reliant. They will be reliant over a period of time, but at least as we see now, and for next at least couple of years, we don't see that model getting replaced. That is one. Now, to answer your question in terms of giving loans or opening accounts, we definitely sit next to the customer, guide them step by step, explain them the terms and conditions, and move ahead. While the phygital model works well, it enforces the trust value between customer and the financial institute. The issue there is the higher attrition rates amongst the staff. Okay, so now this staff, we need to train them. We need to train them not only in terms of product, but also in terms of technology, right? And with the higher turnaround and the staff attrition, what ends up happening is it becomes very important and very costly for the banks and financial institutes to train them, retain them, to make sure we are able to give the right services. So this, in my opinion, is a very important thing. I mean, while we also say phygital is here to stay, the cost of labor is extremely important here.
See, there are two aspects which we all need to look into from a lending perspective, I say. If your risk and ticket size are lower than 50K, the stage-through processing can really make things more smarter and largely into unsecured space. But irony is, if you move into a car loan or two-wheeler loan, whatever you didn't underwrite on completely faceless straight-through processing, but customer has to sign at least 64 wet signature for RTO forms. Yeah. If you wanted to go and register your mortgage, you have to be personally present. Yeah. So I'm saying endeavor is that at a case where my large stakes are there, I don't want to compromise not having a face-to-face interaction. So we do personal discussion, PD we call as a from underwriting process. These are extremely important in terms of securing your large exposure to the customer. HI will always spill over AI, so that's my belief, human intelligence, because that's very important, because the moment I go do a PD, smell, see things around, really helps. That builds confidence with both the parties. From a lender perspective and from a customer perspective, we try to know each other. I think that helps. But over a period of time, if the whole ecosystem works towards that, if tomorrow the blockchain happens, the physical presence of getting registry may not required, or the transfer of the ownership can happen seamlessly. Sure. Those are the areas where a lot of work needs to be done. Only from an underwriting piece or a customer delight piece, I think 70–80% work can be done, but the last leg of customer interface will be still required, depending on the product areas which you wanted to play, like account opening you need to have. In spite of doing CKYC, video KYC, RBI himself has now categorization high risk, low risk. So even after doing a CKYC or video KYC, you still have to go and do the physical stamping. So these, and again I am saying that the two things will coexist till the time the full maturity of the end-to-end system doesn't come.
Sure. So I would just like to add one thing there, Ajay. As an extension of video KYC, at least what we have launched also is video PD that can help in making sure that the personal discussion that takes place is also done digitally,
Yes.
geotagged and saved in the repository for later on for audit purposes and all. This also helps. Maybe trying reduce the underwriting cost. It may not reduce it completely because obviously, as you said, depending on the tier of the customer, whether and the ticket size or what ticket size it is, whether you want to do video PD plus physical visit or only video PD is sufficient. But at least this is one of the examples where we say that a branch staff is also interacting with the customer, but not in person, virtually.
Okay. So actually, you both of you have kind of touched on what I was leading to as my next question, which was on integrating digital and physical models for operational efficiency, because ultimately this has to lead to better operational efficiencies. So you've kind of touched upon it. So about incorporating best practices for seamlessly integrating digital tools into in-branch experiences. And we have discussed that it's actually required that they coexist and one doesn't replace the other. So how do you see this model evolving? And while you did mention the word AI and HI, but more importantly AI, which is kind of looming large all over us now. Yeah. How do you see all of this shaping the future of the branch, of either a physical branch or a digital branch or a hybrid branch? How do you see it?
We haven't, when we talk, the 2 points before I come on to the point. The biggest advantage of the digitalization which is come into play today, the reduction in cost of collections. The ability of all the tools today which are available are helping us to collect payment digitally. Even because of the customer is leaving their digital footprint, some areas there are tools available by which you can trace out the customer. So that is the biggest advantage. So the early delinquency part today can manage digitally without having a human interference. The bot calling and etc. is all started happening. Later stage collection has to be physical, so without that collection will not happen. So again I am saying this part will coexist. It will reduce your cost, bring more efficiency, but you say even bucket 90 plus JNPA customer will pay you digitally, yes, but percentage will be very low. So you require that engagement of physical approach is extremely important. You can get a lot of insight, intelligence to make your efficiency better. But early delinquencies, absolutely, it has taken a huge step in terms of managing that.
Coming to branch, let me go back the memory lane. This is 2012. I used to work as a consultant in SKS Microfinance, now BFIL, part of IndusInd Bank. There the data used to come once a month, and it was always at the month end that we used to get data from burned in CD drives or CD-ROMs coming to the HO, where we used to extract the data, run the power reports, and then send it back to the branches. Now, fast forward 10 to 12 years from there, and that connectivity was using a dongle. Okay.
Sure.
Fast forward 10 to 12 years, now we have a branch where, the transactions are taking place over 5G network. We have digital collections. At least as far as Axis Bank is concerned, we have rolled out digital collections or cashless collections, what we call, in many of the segments. We have launched initiative for e-signs, okay, eliminating the paper. And I think our MFI segment right now is completely gone to e-sign last month. So hopefully around 20th of January. So hopefully this is the first month where all customers will sign digital documents. So I believe that technology definitely has helped, and it provides a multiplier effect to the efforts that the staff is putting in. Okay, so that's how I would like to articulate it.
Thank you. So essentially what we've discussed is that while there are digital tools to be adopted and increasingly leading to operational efficiencies and improvement of productivity, however, physical branches are here to stay for a while because they serve beyond just trust points. They serve as avenues for human interaction and
Yes.
for continued customer engagement.
Yes, absolutely.
Thank you very much, gentlemen. It's been a
Thank
really
you.
pleasure talking to you.
Thank you.
Thank you. And I'm sorry, since we are running behind schedule, we're trying to catch up, so we don't have time for questions. Thank you.
Thank you. Thank you so very much. Can we have a louder round of applause for all three our speakers? And may I please invite on stage Mr. Shashank Shekhar to felicitate all our speakers with a memento, a token of appreciation. Well, that was some fantastic insights on how really banks and financial institutions are really blending the digital agility with physical infrastructure that really enhances the customer trust and accessibility in both rural and semi-urban areas. Thank you. I would urge you all to please come together for a group picture. It's time we get you all clicked in the same frame.